With the U.S. economy continuing to underwhelm, is it still a good time to be in the hotel business? Joining me to discuss just that is Choice Hotels President and CEO, Stephen Joyce. Thanks for taking the time.
Thanks. Actually, the answer to that question is it's a great time to be in the hotel business.
You know, the economy, I've sat down a lot of CEOs this quarter, past couple of weeks. The election seemed to have taken an impact in the first quarter. How do you see this playing out for the balance of the year? Because I can't imagine it's going to get any better, especially after the news we had with Trump this week.
Yeah, well, ignoring the elections, which I think is part of the problem, because I think all the chatter has gotten people nervous, and then the market's been a little volatile. So our sense is, look, we look at several fundamentals. Employment is really good. Consumer confidence is good. Housing starts are good. And the GDP, while it's not the robust growth you want, is getting to the point where it's meaningful for our business. And so when you look at those fundamentals, all of those for us are pretty solid, and we're pretty bullish because not only do we have all those things working for us, where we are predominantly, which is the moderate tier, and when we like to say we represent the 99%, there's no real supply being added. So that's usually when you get in the cycle and there's a lot of supply being added, that's when you get a cool down in the cycle. There's no question that the cycle has peaked for us in the hotel industry, but the reality is peak doesn't mean it's going to decline rapidly. We think we're going to have at least a solid year through 18.
Speaking of peak, that actually touched upon my next question here. Fitch came out with a report this week. They said the U.S. lodging industry is in the twilight of its latest cycle. How would you respond to that?
Well, everybody wants to not be the last one to declare the end of the cycle. There's a couple of smart guys that do forecasting for the industry. They said just because you peaked doesn't mean the cycle ends. And so if you look at the fact that this is a historically very long cycle, which is why people are looking at it, but what has happened is we haven't had the rapid supply growth that has dictated the end of other cycles. We are still overall at below average levels. And it's mixed a little. In the place where we're putting all the Cambrias, we opened 2 here, upscale space, that's where the supply is being added. It will slow us down a little bit in terms of rate, but not in terms of filling hotels, because we're putting those mostly in urban markets, and we have millions of people looking for our products in urban markets, and we don't have enough to serve them.
So Fitch, wrong again. To see you right. Acquisitions.
At least for us.
At least for us. On acquisitions, you sound a little more aggressive on acquisitions on the earnings call. I didn't expect to hear that from you. I guess in light of the Marriott Starwood deal, what has to happen in the industry? Are you looking at anything?
Yeah, well, we look at everything that comes along. So, and there's some things out there now that that we're taking a strong look at. The issue for us is we've got scale. We don't need more. And on top of that, we have several businesses in addition to our core business that we really like our growth over the next 5 years. So the nice thing is we don't have to do anything, but the good thing is we are a very aggressive shopper. The only difference for us is we're very disciplined. So if it doesn't meet our return requirements, which are pretty high, then we're not going to do it because we don't have to.
So it'd be an acquisition for our Choice would be acquiring local independents, or how does that work, or something bigger?
Mostly what we're looking at is we've acquired a technology company. We did that recently. We've launched a technology company. And we also have looked at different brands. So we were in the discussion on Starwood. We didn't go very far because they were a lot bigger than us. And our play with them was, well, you're really big. You need to buy us, but we should run you because we know what we're doing. So that didn't go over well. So we weren't in that discussion for very long. But we've looked almost everything that's coming along. We take a strong look at it, and we view ourselves as someone that can get in, can quickly understand a company, can figure out how well that would work with us, and then we have been in the running on a number of things. We have not ended up buying a major brand. We've done some smaller things, and we're investing a lot. We're investing in Cambria, in our own brands. But we'd be happy to find the right brand to fit in our portfolio. We've made no secret that we'd like a full-service brand to round out what is a robust group of 11 brands. And so we're in the upscale space big with Ascend and Cambria, which are paying dividends. And so, but we don't have to do anything. So as a result, you're going to see us, when we buy something, it's going to be a meaningful acquisition, but that also has returns that our shareholders expect.
Sure, interesting. And then lastly, I don't know if you have any insight on this. You have some hotels in the San Francisco market. Any sense of that market at all?
It is just crazy. That market, you can't afford to build a hotel because of the pricing that has occurred, because of the residential that's demanded, because of the that economy is just on, on fire.
So no slowdown with the Silicon Valley pulling back at all?
No, not in the city. So I'm not as familiar with what is actually happening in San Jose and actually in the center of the Silicon Valley. But San Francisco is just still really, really strong. And we're trying to do new product there. It's really hard to get a deal done.
Interesting. Well, good luck this quarter. We'll talk to you guys soon.
Great. Thanks for being here.